like LeBron, Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Dan, at about 11 p.m. last night, I sent a message to the Discord community, and I said, I'm going to bed. Please do not buy the S&P until I get up.
Wow.
I wake up, and these Europeans have bought 100 points of the S&P. It was up. It was down like 150 points when I went to bed. And we've rallied halfway, and I'm not happy with my friends 5 or 6 hours ahead of me. I have to tell. I mean, I am disappointed.
Now, how do you know? Was it Europeans or Americans that stayed up late to buy the market?
It's a good point, but in general, as an American, I find it much easier to blame Europe.
Yeah. Now, how, I was thinking a couple things. I mean, one, I'm thinking, was there much volume in the to have you bring up maybe the what's the tool? Was there much volume in the futures to take that sucker up? Because you always wonder, what's the volume of the overnight market? Is it a lot of volume?
I bet it was a lot more than normal. I mean, anytime you get a drop like that, it's a lot more than normal.
Well, yeah, because it's interesting. It's just, I mean, think about it. We've been in this nice range for the whole year, and even a little bit before that. And then whack, when you saw that at like 6, I mean, were we down like 160 points or something? Or what was the low?
Yeah, like 150, maybe 155. But more importantly than that, vol was getting real fun. And I was looking forward. I didn't have ES stuff overnight on the weekend, but I did have some VIX and stuff like that. And I was looking forward to monetizing those, Dan.
Absolutely. I mean, are you guessing, or how high did the
I don't know how high VIX would have got. I think probably 38 to 40. That's the way vol was reading last night.
Wow. And you know, as crazy as it was, I forgot, like Friday, we closed at 29, right?
Mm-hmm.
And when you think about it, looking at that VIX, it was kind of resistant, and I felt, okay, getting from 20 to 29 could be very laborious. You agree?
Yes.
But once it gets there, I mean, you think back to the COVID correction. Once it got up there, it could move quickly. And like you said, think about it. Even being down 150, 160 points last night, I agree with you. I think we would almost hit 40. And at this point, it can fly, right? And
I was looking forward to monetizing these VIX calls. I'll put it that way. And listen, Detective says it's Monday morning and Troy's still talking about peeing. Well, let me tell you about this. When you are, before I go to the bathroom, I'm an American. After I go to the bathroom, I'm an American. When I need to go to the bathroom, I'm a Russian. And when I'm in the bathroom, I'm a peon.
Wow. Troy,
anyway, deep thoughts.
That's a lot of information to try to digest.
Yeah. Well, the Europeans, I mean, they ruined it for me. But anyway, so we're still down 70 something. It's fine. Vol's still up.
Yeah.
But it was a little bit of a downer for a vol guy. And again, lesson learned. I'm learning these lessons all the time. I mean, I didn't have any ES stuff because I don't remember why I did. Oh, because they juiced up vol so much into the weekend that I usually the time I buy it. Yeah, I know European. I said I'm a PN. I ruined it, Longsport.
Okay.
So usually I'll do it, but like Friday, Dan. I mean, vol VIX went up like 5% the last 5 minutes. I mean, you could tell they were pricing it in for the weekend.
Oh yeah.
And so I just didn't want to take an ES position right then. It wasn't a good time to do it. Now it would have been a great time to do it in retrospect.
Well, I think it makes sense because it seems against the nature. They jump up quickly at the end, and then you're going to buy. But unfortunately, the thing is, but then you're right. You can handcuff yourself because how do you get out? Right? Like if you did a put credit spread, in the ES overnight or whatever, you would have done well at the low. Or if you sold, if you're in the ES market, but you're right, the VIX doesn't trade overnight, right? You can't really get out of VIX.
No, but sometimes what's funny about the VIX sometimes you actually will get the quotes, but you just won't be able to trade it.
That's even worse.
Oh, I just watched. I mean, I just sat there and watched my quotes last night.
Please,
I mean,
this is
for context of last night. Just to put now, I did not monetize this, so I can't claim victory on this.
I love that word. I did not.
I know my VIX calls. Everybody knows I'm a perma bear, but those VIX calls last night were pricing at 1,000% increase to what I paid for them. Now that wasn't like a blip. That was pretty accurate pricing from what I was seeing, looking at the movement and the ES vol and things like that. Like, so those are the kind of days where you wake up and you're like, that was when you monetize your hedges, when you made 1,000% on them.
Well, and that's basically like 10, 12 points of volatility.
Yeah,
right?
yeah.
That is, Troy, when you say the word monetize, you know what I think of? It's like, you ever see in those movies, many movies with like hitmen or hey, I have a contract or I have it's just a business transaction.
It's a business transaction.
Yeah,
it ain't nothing. It ain't nothing personal, Vinny.
Yeah, it's not just, hey, it was a deal. It's like the movie, I didn't watch, I just watched like the trailer, The Irishman.
Yeah.
I mean, he was a mafia guy, but it's just,
oh yeah.
I mean, even at the end, didn't he, one of his best friends or a good, whatever, I don't know how you have best friends in the mafia, but a good relationship. And hey, it was just, I had to do it.
It's nothing personal.
Nothing,
nothing
personal.
Yeah. Goodfellas is a good one too. Just it's the most heartbreaking one with
just the actor. I mean,
gets whacked. Yeah.
Certain actors were just like made for mafia movies. When you look at like Pesci or who's the guy in The Godfather? Obviously Marlon Brando would be the original. Who took his place? His son.
Yeah. Oh my gosh.
Michael. Oh boy. I mean,
I can see his face. That's unbelievable to me.
I know. But there's guys that are just
Robert De Niro.
But the other guy.
Well, he took Vito was Robert De Niro was Vito.
Yeah.
In the second one.
Yeah.
And
but his son was in the war.
Michael is Al Pacino.
That's it, Al Pacino. Yeah. Those guys are just.
Oh yeah.
You're almost like, guys, you guys are too good for this.
I know.
What's going on here.
I know. Well, speaking of too good, I mean, I feel too good for the market. I feel disgusted. It is what it is. There's nothing you can do.
Go to you for these.
Yeah. Well, I want people to know. I mean, it's not. It can't just all be gravy. I'll tell you what's also interesting. I wanted to test something out last night. James Caan was amazing in it. That's right. James Caan was great.
James Caan was very good.
Yeah. I'll tell you who I love is actually Adrian in Rocky. I think it's Coppola's sister is the one who plays Michael's sister.
Oh yeah, she does
Connie.
well.
I think it's Connie. She's great. Anyway, so looking at the futures right now, we're down 78. VIX is up a paltry 7%. And that's why, I mean, when you think like there was no way VIX was 40 overnight, I promise you VIX was probably 40.
Oh, absolutely.
You know, like
Absolutely.
there was a move about 9 p.m. where things are getting hairy. And so what do you do on a day like today, Dan? Someone's coming in, they're saying, listen, we had some crazy overnight moves. We're still down, falls up. Great time to buy, right? Great time to sell. What do you do?
Yeah, I mean, it's definitely not everybody. You know, when you talk about a lot of people in the a lot of people watching more range bound traders, you agree, in some capacity. And I just think it's a you have to maybe number one for some people, not you know, I'd say for most, because we're out of the I look at it this way. If you look at the normal, maybe a way to say it, what's a normal range that I would look at and say, hey, do our range bound trades? I would say over the last year, 14 to 23, right? Because that's our normal range. Okay, so you say, well, what happens when we go out of that range? 25, 26, 30. Does that mean you couldn't sell premium? Well, you say, no, of course you could sell premium, but now you're kind of in a little bit of a little different environment that we're not range bound anymore, right? We're kind of, I mean, you could say, I mean, sure, we're coming back into range at time, but okay, we're out of range. So you don't have this. What do you want with range bound trades? Some stability, right? Whether it be DCs, you don't want it to go too far. Put credit spreads, you don't want it to go too far down. So you want something. So what do you do there? Number one, size, right? Is okay, size. And number two, I think pick your spots, right? I mean, you want a little bit of stability, right? And I think you'll get that. I think there's not, because what you say last night, taking the market down, I know a lot of the European markets, Korea was down a lot, but I mean, there's no new news on the war, right? It's just that it's that market uncertainty. So I think you'll continue to have ranges. And I think it's a matter of pick your spots with, you have some really good range bound. But I think it is smaller, I think smaller size. But again, you know, when you think about, I was thinking about this thing and the sizing, Troy, the market does it for us. In other words, if you look at something like a balanced butterfly, I was looking at this, a balanced butterfly, let's just say, just giving it just for credence, I'm just 3 weeks out. I know in the OO community, 3 weeks out is like, what the heck are you doing?
You talk about leaps.
It's like leaps. Yeah, I'm doing 3 week out options. But if you do like a 70, let's just take a 70 wide butterfly, right? A 70 wide butterfly in the calls or the puts, 3 weeks out might be 15. Let me see. So, it might be $11 or something like that, $10 or whatever. And you're also going to be short a couple deltas, right? And it's going to be very good for the downside. Well, what happens when you go from a 16 volatility on your butterflies up to 30? Very interesting things. It automatically cuts your size because one butterfly now, instead of being $1,100, is only $500. And your deltas are almost neutral. So it's like, it's automatically sizing for you, right? Your butterflies are cheaper, balanced butterflies, broken butterflies. So I say, let that, that's one of the functions. It changes your Greeks. It makes you less short on these types of butterflies, and it's cheaper. Now, on the other hand, you take the world of calendars, right? And short term, long term, it's a little different, right? You get room, right? We're in Knoxville. You get from Knoxville to Venezuela to the break evens, right? So you say, oh my goodness, this is free money. But now the challenge is, what if that thing called VIX, what if the premium contracts? Houston, we got a problem. So those trades can work well in a high vol environment until, like, what's the musical chairs we play to kids at parties when we were growing up? Musical chairs.
Yeah, musical
if
chairs.
the music stops and VIX contracts 5 or 6 points. But I don't, so that's what you're up against. It's a little bit, the market's helping you size it. So you can do a lot of your normal stuff, but the risk is higher, right? But don't you think, Troy? Sure. If we didn't have a war going on, we'd all still say, look, we were near 7,000. We need to go down 5 or 6%, some kind of like last April type thing. But with the war, we still need to go down. At some point, go down some. But I just think we're continuing into what we've been going all year, this back and forth. But maybe this time we're going back or forth at a breakneck speed. I'd like to know from the what is it, the volume thing you look, what's it
market profile?
Market. I'd like to know from there, because we've kind of shifted. Last week we didn't really go much over we didn't even hit 6,900 last week, right? So it's kind of moved. We were 6,800 to 7,000 all year. Now last week it was more 6,900 or 6,870 at the top, but the bottom is kind of expanded. What are you seeing, if you don't mind going over that? What do you see kind of as our range? Because this is the first week of the year where we're really,
so
the downside has kind of come into play a bit.
A little bit. What's interesting, you look at this is a really, really condensed version of this. And it's basically going back to, I'm getting more condensed here, to go mid-January. Okay, since mid-January. Well, this gap is gapping below the range. 6,700 is entering into that lower zone of that range. So Dan, this is the point, to your point. We're right there. We could go right back into range today. But we're taking a shot for the first time since probably December out of a range.
That's right.
Now, here's where market profile gets really interesting. Dan, do you know what they say? If you break out of a range and you go back into the range, what the statistical chance it's going to happen next is?
No, because I'm not anything to do with charts or any of that.
It's a trick question. You're probably going to try to go test the other side of the range.
Oh, the reverse up, you mean?
Reverse. And so, I've always been a little chicken about this stuff, but this time it might. I like to get real emotional before I trade and make all my decisions emotionally. Since I'm so mad about my VIX stuff, I might just buy a bunch of calls today, but we'll see. I kid. I'm not buying a bunch of calls today. In fact, I did a little experiment last night, Dan, where I did something in ES and it is not working, but it's interesting. And so I thought, it's okay.
Yeah, let's.
I can't really show you, but I'm going to tell you what it is.
Yeah.
I bought, so we're at 66.77.
Yeah.
When we were about 80 points below this, I sold one 65.20 put expiring today and a 65.15 put expiring Wednesday. So a diagonal on that side. Okay.
Wait, which one were you buying and which one were you selling? You bought the Wednesday?
Matt, we're just talking about what a trade I put on last night.
Good morning, Matt.
Good morning.
So
who unplugged the market?
I know. I put on 65.20 put expiring today, 65.15 put expiring Wednesday.
And you bought the Wednesday?
Bought the Wednesday.
Okay, gotcha.
And then I sold 367.05 calls expiring today and bought 36700 calls expiring Wednesday. So it's inverse. So the strike is in on the call side to get extra deltas, and it's outside the short, the longs outside the short on the outside to get the put side to get long deltas. So you would think in an 80-point rally, and it's a 1-3. So I have one put and 3 calls.
And your calls are more centered at like the 67.
It'd be crazy if we had a modeling tool you could.
I just can't do an ES, man. So I wasn't going to try to model it. But so anyway, it's a 1-3 DC. It's what? Look at this. It's a double diagonal 1-3 with extra deltas. It is bullish. That's right, Tom. It's a bullish diagonal.
It should be doing well.
Dan, I'm down $500 per spread on that.
Oh, we got an answer for you.
That's
Well, I
what
was going to say, like Tom said, you're leaning long deltas. We're going the direction you went near 6,700, right?
Mm-hmm.
So the only thing missing is you are long Vega on that thing.
I am long Vega,
but it looks like VIX is actually going to open up to 31.
Yeah,
but they must have.
Well, when I put it on, VIX is going to open up, but when I put it on, VIX was probably 37.
Yeah.
Oh,
yeah,
you did it in ES.
I did it in ES.
When did you do this?
Last night.
Oh, you did it last night. Oh my goodness. So
Vol's been crushing, yeah.
When you did it, is that that's when you thought that's probably, did you do it near the lows?
Kind of towards the lows, yeah.
Okay, so that's your answer, right?
Well, yeah, no, that's it. And
wow, because even though they didn't have VIX trading last night, it was affected in the prices.
That's right. And Tom, you're right to do that. Tom says, I'm going to do an iron fly right where Troy's Valley of Death is.
Always a PE play.
I love it.
I've been told.
Now, Matt, you missed. Tom was on Friday.
I missed it.
And people have commented to me to say it was all right. I'm just kidding. People said they loved it. People said it was awesome. And I saw for a fact in Discord, Dan, all day Friday, people were giving thanks to Tom for his work in the community. And I love to see it. And I love to see everybody. And again, if you missed Friday's show, I'll give you the TLDR. At Tom Lee today and just tell him thank you. And do it as many times
hourly, at least,
as he's helped you.
Yeah.
If he's helped you a lot, I think at
73 times.
Now, Tom's a gentleman. I saw him respond to almost all of those, which was very impressive to me.
Well, Liz, I'll say two things. Two things about Tom. One, when I would look, just look in the Discord and see the activity, I was astounded early that the amount of, and there's many of them in there, but I just think of like the world famous Wizzy, Amy and Tom, and there's many others. So please forgive me. I'm not the one, I'm not in there enough, but sometimes I would just sit in there and watch the graciousness of these folk. And you could kind of see sometimes people are coming in, they're a little confused. They could be beginners and whatever the reason. And they would work with them. I'm like, wow, I wish I had that patience. I mean, they are excellent. But I'll say this, what Tom mentioned Friday, I was thinking about this over the weekend, just the whole portfolio thing. I talk a lot, and it got me thinking more on the portfolio. How do you handle multiple trades? How do you, what are some thoughts? Yeah, I was going to do a video this because that's so important. But then I thought, well, I'm so thankful you have a backtesting tool that now you can throw your portfolio ideas together, right? And see if it makes sense, because I've always kind of done it by the seat of the pants and looked at, okay, what do you want in a portfolio? Well, so you do the best you can just on experience. But again, back to the movie Moneyball, those old guys didn't have it. It was the young guy who I still love that when he'd always point to him. What's the reason? It's the data, or it's the data. He'd always do that with him.
Do you want me to talk when I do this?
Yeah, when I do that. Yeah. But the thing is, when you think of portfolio or diversification of multiple trades in SPX, I think of like basic, I want to diversify my timing. I want to diversify my price risk. And you guys are great at that. Okay, we're going to set this trade on this day, this, and this day. Then diversify durations. And you guys do that, but much more better than, you diversify. Okay. So when do you put the trades on, right? Diversify the timing of it, because you don't want all your, if we have a big move, you don't want them all. I put all my trades on the same day, and I'm putting out 9 fires in one day. Then diversify strategies, different durations, and on, more diversifications. But I think that is so key. But you guys do it in the portfolio, but again, in the back testing, but you can test it and say, I know you think it's a brilliant idea, but we just tested it. It really doesn't work. And again, because we would just do up the seat of the pants, and like in the pit, I had to bring that in because we had time. In the pit, we'd have, okay, here's our trades for the position. And like the brokerage firms, we didn't have, instead of think or swim or tasty trade, there was one called First Options of Chicago, which was one of the bigger ones to back traders. And what they would do with the sheets in the morning, this is before computers, they would put the numbers out there, and they say, look, here's your combined trades. Here's your combined vehicle stocks and OEX, precursor to SPX. If we go down 10% in the market, you no longer exist. I mean, it would literally, it gives you these, that we get a block. I would carry up because I'd come in, grab the coffee, and have donuts or bagels free. And I'd grab the sheets. Literally, you'd come up with, a ton of sheets because we didn't have computers. And it'd say, okay, if we go down 10%, you guys are gone. You're all back working at the shoe store. And so I would go over to the OEX pit, right? And say, okay, we need to buy 120 puts or 150 puts just as insurance. You're throwing it out the window, hopefully, right? But if we don't buy those puts and we have a black swan, it's good night, Irene, right? And so it was great to hear. And they would do all these testings. They would say, okay, market goes down, vols up 5%, 10%, 20%, 30%. And then you would analyze these sheets before we had any kind of tools. And then you'd try to make decisions what you would do. And I'm thankful that the back testing, and now you have, what's his, Romeo? Is that Romeo, right?
Yeah, Romeo's working with
He
trade
helped
blocks
with that.
and all sorts of stuff. Yeah.
All that portfolio. So I think it's just, it's really wonderful for retail traders.
Well, we've got the tools, but the thing too, Dan, is the community is very helpful. And to the point, like you have, Dan's the legend, so he's helping, kind of steer the ship. But then you've got these little captains. You got Tom, you got Amy, you got Wizzy, you got these guys. And Wizzy, was touched by Tom's interview Friday, and he drew a picture of Tom doing the interview, which I thought was really sweet.
That took a lot of time.
Yeah.
Wow. Oil on canvas.
Oh my, that is awesome.
Yeah. I think that's wonderful. And, Tom,
Those are some small suits of armor.
Very small suits of armor, a primordial armory with broken windows and things like that.
I love the greenery out there.
That is a phenomenal picture.
I thought that
it's impressive.
It's impressive. But listen, speaking of impressive,
can I just let me interrupt your segue with a segue. Dan just gave a pretty interesting talk about what it was like in yonder days in the pits, etc. He has an awesome video. It's on the OO YouTube channel. It's called Managing Your Trades by the Greeks. And if you're interested in kind of what a breakdown is when you're like an options trader, I'm not talking about, no offense, but I'm not talking about just layering spreads all day. Like if you're doing something complex where you've got flies, time spreads, credit spreads, debit spreads at different sizes, at different expirations, Dan has a wonderful demo of the modeling tool and talks through the thought process on how to use, as the title says, how to use your Greeks and how somebody who's more institutional might approach trade management when you have something more complex going on. It's on the, it's like less than 2 weeks old. It's on the OO YouTube channel. If I could figure out how to link it in here, I will link it. But yeah, it's a great watch if you're interested. So Managing Your Trades by the Greeks.
Speaking of managing trades by the Greeks, Matt, I told Dan a while ago, these I have a bunch of VIX calls, as you know, million destroyers. And the trade, the price, the quotes were actually working last night in VIX, even though you couldn't trade it. And I was up 1,000% on those VIX calls last night.
Ooh.
Now I'm not now.
Torturous
Okay.
to watch. Can you
Oh,
imagine
torturous.
him watch my blood pressure would have gone watching the bid, and you can't get out. I mean, unbelievable.
These Europeans. I mean, listen, I love you guys. It's
So you're blaming the Europeans.
wonderful, wonderful cultures, tremendous cultures. Love
Great
visiting you.
response.
Do not trade. We should close. Well, don't trade the S&P in the mornings. There's other stocks to trade. There's things, trade individual names. Do whatever you want to do. Don't touch S&P.
They got their own indices to trade.
They and I know they're probably super liquid.
Now we're mad at the Europe. We're blaming the Europeans for last night. I love it.
Tom, great point. They had a brief discussion in the Discord over the weekend on delta convexity and asymmetric payoff, worth
Ooh.
searching for in the thread, and it is worth searching for. So here's my question. You think, how does Troy hedge that? Like, how do you lock in profit if the vehicle that you're trading is up a large percent vol, but it's closed, so you can't monetize it until the next morning? So how do you do that? Tom, are you reading my Tom, do you have access to my computer? He says, Dan, Troy should have locked his VIX options gains in with VIX futures last night.
Yes.
That's what I did. Now, did I lock
I
in?
didn't hear that.
Did I lock in 1,000%? No, I did not. I did not lock in 1,000%.
Well, that's a good point, right? Because you still, it's like having a. You're right. If you would have, that's a great point, because if you had, let's say you had a ratio back spread on last night, right? Where you were long SPX puts and you were long the futures, it'd be the same thing, right? You're long SPX put, long market goes down.
Yeah.
You get short deltas up the yin yang,
Yeah.
and you can buy back your futures. All right. So you're making good money.
Yeah.
But these puts, you should have, instead of, I'm sorry, you'd be,
It's reverse it. That same principle calls. And so
you're buying futures. So on the downside,
selling futures against
yeah,
it.
on the downside, you would have rather sold out your long puts, right?
Yeah.
But you can't.
Right.
So what do? You have to buy more futures.
Yeah. Now the way I do this, because even though I know, even like retrospect's always 2020, I should have done this heavier in the paint. But at the time last night, I thought I was going heavier in the paint, because Friday I started doing this. Like, I was locking in gains as I go. And so in vol. So what you do is, when we're in backwardation, you can sell the front month, buy the back month, right? That's how you short vol backwardation, is you sell the front month future and you buy the back month future, because that spread should, in normal environments, longer dated term structures are more expensive, right? Like when we're in contango, a 30-day option should be less expensive than a 60-day option.
Yeah.
Well, in backwardation, especially if futures are just cleaner, the front month is much more expensive than the back month. So how do you short backwardation? You short the front month, you buy the back month. So that's how I lock in profit on some of these vol convexity trades.
You time spread it.
Time spread it. It's just a reverse time spread, basically. But here's the problem. I inherently, in me, it's very difficult to just naked short a future. I'm not a big fan of it in general. So I oftentimes don't do enough. So last night, I've been doing it 1-to-1, shorting backwardation. Last night, to lock stuff in, I went a little heavy in the paint, and the ratio is more front month than back month now. So I locked some stuff in. We did what we could. Did I lock in 1,000%? No, I did not. But the point being is, I think it's an interesting discussion. How do you play vol overnight if you're long vol, but you can't trade the product? You have to go to futures.
Yeah.
There's a VIX future and a micro future. So you can do it in different sizes if you need to do it. But that's how you handle that, The more you know, lesson learned.
Yeah.
So anyway, it's going to be a fun day. We are rallying. I mean, 65. We're up down 65, which feels like we're up 85.
Right.
Yeah. Well, let's see. I looked at I try not to look at ES on the weekends. It's just, I've got some weekend hedges on just for my time spreads. I've got some time spreads on. And I opened up X last night, and of course it was the top thing. So then I was off on the rabbit trail and looked at it a number of times. And when we were down over 2%, it's like this thing's either going to 3.5, 4, or it's going back to 1.
That's right. Those are the options. It's not staying at 2%. That's
No.
exactly right. And so you make your bets.
Yeah. And so we'll see.
So
This is why I love Vault. People, obviously perma bear, blah, blah, blah. This is why I love having that type of protection, though, is on moments like this, I could sell put spreads all day. I don't give a crap. I could sell ES put spreads all day because we're down 160 points. I'm getting huge ranges on this.
Yeah.
And you're just locking in profit at that point. Like, especially spreads. Like, I'm not going naked puts or anything like that. But it just gives you a lot of optionality to be able to lock in stuff during these processes,
Can I ask a question? I'm just thinking, I don't know how you look at this. Like Matt was saying, okay, I had some trades on, and then I had a hedge over the weekend, and the hedge kicked in and was doing well.
Well, I have the hedges automated, so I'll know in like 10 to 15 minutes how.
But what I'm saying,
I'm not even worried about them.
Can you in the portfolio thing see, like for me, again, my first thing I'm thinking of, well, let's just say it's all SPX, right? And you have, let's say it's all SPX. I'm doing this hedge, and I'm looking at this. My first thing would be, okay, with that hedge, when we were down 2%, what were my deltas net?
Yeah.
And the whole thing, because if I was still long deltas, if the hedge didn't get me
right,
but if the hedge got me where I was short deltas down there, I'd want to probably do something, right?
Yeah.
Because hedges generally can get you short deltas.
I think I was long delta, but
you were still long deltas even with
so.
the hedge. Okay,
I think so. I like, to be honest, I can look. I didn't even look at that. I looked at.
Can you get that on the?
Yeah, you can model. I mean, you can model. It's just
so you can know your deltas on that kind of a move.
Yeah, all together. Now, pre-market is a little different. The prices refresh, but pre-market Greeks are a little bit.
Oh, you're right.
But the I mean, the thing about hedges that's interesting is, I'll just say this: I don't use the same DTE.
I'm not interrupting. Yeah. I'm just gonna walk right out here, right behind me, and use the restroom real quick. But I'll be right back.
Oh my gosh, it is time for the show to end, Troy. So you can. Oh my goodness,
cooking.
Oh my goodness,
this is the most old man position. Like, look at this. Look at these little legs.
We just got cooked. If you want to participate in buying Troy some leg machines for increasing his leg day workouts, let us know. But
you know
what? Listen, Dan, oil. I mean, listen, there's like a million ways to look at oil. Okay. So yeah. I'm just using little old normie, the Brent indicator, the normal Brent indicator on Trading View. And man, like, talk about a spike. I think I looked at this. I literally looked at this right before bed. We had daylight savings, and I looked at it and saw the worst because it was about 114. And I literally looked at the peak, and we're back down to below 100. Again, there's a lot of different ways you can measure the price of oil, right? But it's still up. I mean, we're still up almost 10%. Yeah. But I don't own as many oil stocks currently as I typically do. But
what's the symbol on that, Matt? The Brent?
I just use the Brent, but I mean, there's people look at futures, they look at WTI. I mean, there's multiple ways to look at what oil is doing. So
well, listen, oil was real fun last night. Yeah. if you tried to trade oil last night, God bless you.
Oh yeah.
Options particularly.
Yeah.
It was
Options on futures.
spready. You know what's funny? I had a USO double calendar that did amazing.
Yeah.
And I actually think it's interesting. I don't know. We'll see. I have a feeling probably we're at the top, but anyway.
I think so too. And listen, permanent oil bull here.
Yeah.
I think, this isn't the macro show. This is the options trading show. But yeah, I think we're I listen, the cure for high prices is high prices.
That's exactly right. So, all right.
That's
Listen,
right.
on that note, we got to get trading and being really sad for the next 5 minutes as I look at these VIX calls open. So
Don't look.
Yeah.
That's right.
y'all have a great trading day. Be safe. Listen, we've got some fun little content changes that are coming in the next couple of weeks that I think you guys are going to like. I know you want more Dan, more Troy quads, things like that. And we're looking at a way to give you